I'm talking now to Aquis Exchange listed WeCap PLC. Now, it's a penny stock. It's with a market cap of just over £5 million, but the buzz is around its investment in WeShop. And the news just out that WeCap has just announced a subscription for a further £900,000 worth of WeShop Holdings Limited stock. We'll get more about the USP about this business in just a minute. Let's introduce our two guests that we're talking to over the next 10 or 15 minutes. John Garner is in New York, and he's a director of WeShop Holdings, which operates the e-commerce business at the center of what we're talking about today. He joins us on the line, as I say, from New York. And John Taylor, closer to home, here in good old Britain, executive director of WeCap PLC. Mr. Taylor, I'll get up to speed with you in just a minute. But John Garner, first of all, if I could kick in with you. Now, you are the director of WeShop Holdings. We're not talking about WeShop in terms of the investment proposition today, but my understanding is this is the general sort of the motor behind the business we're talking about. Explain more about what it is that you're doing at WeShop and how it works.
Yeah, of course. Good morning, Jeremy. Thanks for having us. So WeShop is a online shopping platform. It's an app which anyone can go and download from the App Store. We've aggregated the top retailers in the UK, including people like John Lewis, Boots, Majestic Wine, eBay, Booking.com, Expedia, Trainline. I could keep going on. The difference is if you come to the WeShop app and you shop at any of those places, it takes you through to that website, which you shop from anyway. And the reward that we are giving our users who use the app is actual equity within the business, as in actual equity in the platform. So if we think about all the platforms in the world, such as fantastic platforms that Meta, so Facebook and Instagram and WhatsApp, imagine if the users that have actually built the value in those platforms owned the platforms and actually own the equity within the platforms. So this is the ultimate reward where people can actually earn equity in the underlying platform that is WeShop for doing their everyday shopping. So it is still the same items from the same retailers at the same price, but they are actually earning shares in the underlying platform, which is WeShop Holdings.
That sounds like, as I said, a USP over other shopping apps and shopping opportunities and investment opportunities. I want to get more into this idea about owning shares in just a minute. Let's talk a little bit about how it's grown, first of all, to see what the appeal is like. Again, going back to you, John Garner, talk a little bit more about the background to what we're seeing in terms of the movement and what the uptake has been from your clients.
Yes, thanks, Jeremy. We launched a proof of concept trial effectively to see what would work and what wouldn't work. This hasn't been done before. So we wanted to see the reaction and see what our conversion rates were like. So we've done a proof of concept trial. It's gone phenomenally well. We have now done over £75 million in the sales of GMV. We have got hundreds of thousands of users, which we haven't paid to acquire. So when we did our proof of concept, we wanted to make it as hard on ourselves as possible. So with no acquisition marketing, in the United Kingdom, where there's such a great understanding what shares are as it is somewhere like, for example, the US. So the trial's complete. The exciting bit for us about the proof of concept trial is actually the conversion and retention rates. Conversion rate being somebody comes to our platform, they click out and actually make a purchase. And those conversion rates are over 20%, which we're very happy with. Second part we talk about is retention. So retention rates are, if we can get someone to use the platform once, do they come back? So we're absolutely thrilled with our retention rates, where we can see on any one day where the purchase is going through, over 50% of those purchases are from users that have bought 10 things or more on the platform. So obviously the big equation for us is what's the customer acquisition cost versus the long-term value. So where we're sitting at the moment, we're very happy with that, where those metrics work. We're now taking all that data in from our proof of concept, which is over 570,000 transactions now, and looking at what we need to do now to scale this platform in the UK and globally.
And let me just confirm, there's no cost to download the app. There's no cost to join. Is that correct? And there's no subscription?
That is totally correct. So it's totally free to join. There is no subscription cost. You are buying the same products from the same retailers at the same price being delivered by those retailers.
Okay, let me quickly move on to how this is investable and so forth. And John Taylor, let me bring you in as executive director of WeCap PLC, which I say is the Aquis listed stock. And now, primarily you're an investment platform and you're investing in WeShop. Explain more about the business model here and what investors are given the opportunity to invest in and the long-term returns?
Yeah, so look, as director of WeCap PLC, as you said, we're an Aquis listed investing company, and we've been investing in the WeShop story now for a number of years. In aggregate, we've invested just over £12 million into WeShop holdings. And given that around 97% of our net asset value within WeCap is related to the WeShop position, we can effectively be viewed as a listed proxy for WeShop holdings. Hence our recent name change to WeCap PLC to try and make that link more explicit. So as a listed vehicle, we've been able to attract backers into WeShop that may not want to or may not be able to invest directly into WeShop as a private company. And that includes some stalwarts of the small cap investing space, including Premier Miton. They hold around 9% of our equity, and various other UK-based and indeed international family offices. So we've been steadily increasing our exposure to WeShop, both via direct investments into WeShop in convertible loan notes, and also indirectly through an equity holding in a vehicle that is in turn a 29% shareholder in WeShop. So that sounds complicated. So let me try and simplify that. So should we in WeCap take up the right to convert our loan position in WeShop, we'd end up holding around 15% of the equity of WeShop holdings, so a significant stake. And if you derive a valuation in WeShop, say from their last equity raise, which was at £4.76 a share, the value of that 15% holding to WeCap comes out at around £24.5 million. Compare that to our current market cap, as you mentioned earlier, of closer to £5-6 million. That's a net asset value per share in WeCap PLC of 6p against the current share price of 1.5. So if you like the sound of the WeShop story, and there are lots of savvy small cap investors that do, including us, the route in for a retail investor is clearly through an investment into WeCap PLC, and we think that there's a significant arbitrage opportunity there, given the discount that we're trading at against the NAV of WeShop.
So John Taylor, let me just stay with you just for a minute and focus more in about this breaking news we've seen today about this £900,000, this extra investment you've made in the business. Why now? What's it involving? And I guess where have you got the money from? Because clearly this is an investment you're making to turn a profit.
Yeah, exactly. We had the opportunity to invest a further 900,000 in a legacy convertible loan note that we've had on the go with WeShop for around about a year. We've taken up that opportunity. You'll have seen that we recently conducted a £1 million fundraise into WeCap, and we've used the proceeds of that fundraise to top up that CLN to the maximum we can. There's a real value proposition there because the convertible loan note gives us the opportunity to convert into WeShop shares at £2 a share. Less than half well under half the price that people are investing into WeShop privately at the moment. So that's the reason that we've done it now, and we're delighted to have taken up that opportunity for the further investment.
So talk a little bit more about where we are in terms of share price and the market cap at 5 million. You said you're talking about a value of the business in excess of 20 million. The difference is quite an eye-watering amount of money, and potentially, presumably, investors are buying into the opportunity to get hold of that as profit. When do you see that happening? What needs to happen within the business to trigger that sort of improvement in the market cap?
Yeah, you're right. Look, there's a clear disconnect between the net asset value of the investment based on what people are investing into WeShop privately and our market cap. We've mentioned earlier that it's the difference between 5-6 million of market cap and an asset value of that investment of about 24.5 million. Clearly, because we're a listed company and it would be classed as a risky investment, you would apply a discount, but we think the discount that's applied by the market at the moment is severe. And the kind of thing that helps narrow that gap is clearly increasing recognition of the WeShop story out there and getting people excited about what's going on in WeShop. We provide regular updates on that. And also, I think WeShop's own journey going forwards over the next 12 months, in which it itself is trying to achieve a listing, but probably a listing in a non-London market, and most likely in the US. There's a good reason John at the moment is in the US, which I'm sure he can elaborate on more, but that's very much the aspiration. that this business really makes sense, WeShop, when it achieves its own listing, and then there'll be a clear see-through to our own investment value.
Yeah, well, John Garner, let me pick up with that point. What John Taylor's just been talking about, the fact you're in New York, and obviously that's the home of one of the biggest and most active markets in the world. What are your aspirations there for the business to expand?
So it's interesting, Jeremy. So for us to actually launch the product in the US, it does need to be on an exchange. So at the moment, we wouldn't be able to market the product due to some of the securities laws over here in the US without a listing. So look, I am in New York at the moment. We were here in Q4 last year as well. We are talking to all potential advisors with regards to moving the company forward onto a listing and a product launch in the US. The US is a very interesting market for us. Obviously, there's size here in terms of online retail, but more so a greater understanding of regularity around trading stocks and shares in the US. So we've all seen probably the film called Dumb Money, where Robin Hood's heavily featured. Robin Hood was there to democratize stocks and shares for people to trade through free trading platforms. And you look at someone like Robin Hood, they've got 24 million funded accounts of people that understand what stocks and shares are. So it's two sides to us. Number one, a huge online market here in terms of retail, and number two, the understanding of the retail stock market by citizens in the US. I think also as well, the US is great, but we're looking at other markets as well, including certain places in South America, such as Brazil, very heavy on e-commerce, and looking to expand into other markets as well. So the technology scales internationally, but we see the US as a really good opportunity.
Yeah, let me just also rewind as well, if I can, the interview, John Garner, to talk a little bit more about the way in which you're treating these people using the platform. This idea that users are rewarded in shares, that must surely be eating into margin, which ultimately means investment potential, downtick in investment potential. Explain how all this works, because to the uninitiated like me, it seems like it's a nice thing for the shoppers to get hold of, but it does water down the investment potential, doesn't it?
It's actually quite the opposite, Jeremy. So if you think about it, we as a business earn money we get paid in commissions from the retailers every time we drive a sale. We get advertising revenues. In this year also, we'll be looking at data revenues and various other revenues. So what happens is we get to actually an inflection point where our share back rate is actually less than the profit we make on each transaction. So if you think about it, people say this is a dilutive mechanism. It's actually the opposite. If our profit is above our share back rate, then it's the wrong terminology, but it's almost earnings enhancing. And obviously, if you applied that onto a public market where there would be a multiple on our earnings, it gets quite exciting. We spent a lot of money with a leading global management consultancy on the financial model. And the model is actually fascinating on how it works. So it's not dilutive as long as the inflection point is achieved where profitability is above where the share back rates are. But it's a fascinating model.
So John Garner, just the last question to you. As John Taylor said, pretty much that WeCap is now fully invested. It's just a question of a watching brief to some degree. But obviously, the big performance over the next 12 months really comes from you. Just quickly recap what's in your in tray, what's utmost importance in order to try and deliver this value.
Yeah, thanks, Jeremy. So next 12 months are incredibly important for us. As we said, our proof of concept trial is complete with tens of millions of pounds of sales and hundreds of thousands of transactions. We now need to grow. We have there's a lot of tech building going on at the moment to integrate things like Messenger, which allows us to scale a lot quicker with our micro communities and nano influencers. We want a listing. Obviously, that's a key part of the business, and it's a pillar of the business. So we're working very hard on that listing. We're working very hard on our product launch plans in the US, and also looking at other territories. Meanwhile, still obsessing over our users and customers in terms of improving even above our current conversion and retention rate. So big focus on international expansion and a US listing, along with making the platform
globally
scalable for the next 12 months.
Yeah, I like that word, obsessing over your clients. That's where the money's made. Look, both of you, thank you very much indeed for joining us. It's a pleasure to be able to catch up with you. John Garner in New York and John Taylor here in the UK. We're talking there to the Aquis listed WeCap PLC and its investments in WeShop.